Hello traders, welcome to another daily analysis. Today is Tuesday, November 22nd. Right now just right after 9:20 p.m. Eastern Standard Time. So let's get into it. Today is another light economic data day and with no tier 1 data in London session. One core retail sales and retail sales data is from Canada that turned out to be negative, which I'll talk more about that later on. Another data is the US home sales, which also came out today, increased in October to a highest level in more than 9.5 years. And the inventory also falls 4% from last year. So this is more significant. What happened is that basically the housing market has picked up greatly in US. And many of you might wonder, since the bond yield has risen so much, now is that going to affect the housing market? Now, absolutely. But I also urge people to make decision right now, because whoever wants to buy a house, whoever wants to buy a house in US, you really have to act quickly. There's no time for you to think anymore, because you know that the interest rate will rise very soon and will probably rise more next year. So if people who are in the US wants to buy a house, who are capable of buying a house, will decide to jump in right now. So that's the first sign that the interest rate is really going to go up. Second thing is that people are taking opportunity with the last timing of this low interest rate market in US. And third thing, of course, no matter how good the interest rate is, you're not going to buy a house if you're not confident about your job and the future. So basically saying that a lot of basically the consumers in US are quite confident in terms of the labor market. So now people, not only the job is almost in a full employment in US, people are actually shows that in their behavior of buying a house. So that's all very good sign for the future economy for US. So really, regardless of the sentiment of whether people have enough faith toward the new president, but in terms of financial market, not only in the trading or stock, but in the actual demand of the housing, is actually showing a very strong support for the US economy. So it seems right now, just looking at this data, it does look very bright in US. Things look very bright in US, and it's really an important thing whenever the housing market actually supported whatever has happened in the economy. Now, I'm not saying that the housing market is always the benchmark, because what happened back in 2008, the collapse was exactly because the over booming in the housing market. But in US specifically, because you see everything is picking up, especially the GDP and unemployment rate and the inflation data. Now we have all these things are going up, and then the housing market is going up. You are really in economic expansion, but it's recover way much better, expansion way much better than the neighboring countries of the G8. Now in Canada, again, the retail sale was up, but if you're looking at more detail, it's mostly due to the core resale, and mostly it is due to the non-core resale was up, and mostly due to the card and the parts. So saying that a lot of other area of consumption is still very low, and this is have to take in consideration that the government actually run a budget deficit, also send out a new incentive for medium or low income family. But it just shows that the money that the government borrow and send out has not been spent yet on the goods and services. So not really a good sign for Canada in terms of economy. So if you look at any Canadian dollar surge now, they're really most likely it's all contribute to this OPEC meeting and the possibility of oil market surge. Now I have to remind you, that's just a possibility and rumor. So what happens is that once that OPEC meeting, if it fails, then really there's nothing else to support the Canadian dollar at fundamental level. So that will really signal a lot of weakness into the Canadian dollar in the future if the oil market cannot help it. Now, whether they're going to cut interest rate or not really depend, but I'm of course leaning toward more easing than rate hike, and mainly because if the oil market is not picking up, then really the only industry that left booming in Canada is the real estate. Then the real estate is already booming because of the low interest rate market. So they will have to either maintain that or to cut even lower to at least help their only booming sector if the oil market is not looking well in the future after November 30. So market in general right now is still very sentimental driven, really not much fundamental news as mentioned. WTI had a small red, doji, have a small indecisive candle, and of course we have once again news from OPEC member. People start showing hesitation toward the meeting, and I keep mentioning it's no surprise because no one really wanna curb this output. Really, generally speaking, when you are doing something that against the economic supply and demand artificially, it's really not going to work in the long run. For example, if you have this kind of price control, price ceiling, price flooring, it's never going to work in the long run because you're really against the nature of economy. So right now, the OPEC member is trying to do exactly like that. They're trying to freeze the oil output, but then again, people are selfish and nations are selfish. So of course, nations start feeling that they don't wanna. You start having this chat like, he produced more than me. Then you will always have this kind of argument. So of course, today we also have this hesitation from Iran, again hesitation from Iraq, and also you don't have any commitment from Russia. Russia saying that they might freeze if the OPEC cut deal, but how can you believe that? Like honestly, because even U.S. oil producer is not going to curb their output. In fact, they are actually going to produce, if the OPEC curb the output, because it's a great time for them to make more money. So really, that's the fundamentally. I just don't know what's the really the logic of this curb. You just don't think it's going to work in the long run. Of course, if they reach agreement November 30, yes, it's going to help boost the oil market, hence help the Canadian dollar in the short run. But definitely in long-term perspective, I don't know whether it's going to work or not. Now, looking at another news from the future market is that they're saying if you're looking at the futures contract, it does not show any signs of buying. That means that although the market is saying that yes, the oil may be cut and then that's gonna boost the price, but it does not show it's in actual trading. As I was saying that when you trade, you need 3 and 4, you need 3 plus 1 analysis. You need fundamental, sentimental, and then you also need to look at technical analysis, which is an actual reaction of traders in the market. So if you're looking at a futures market, which is really a very good benchmark, it's not much buying into the futures contract, and a lot of buying actually due to a short covering. So what happened is that a lot of people are very bearish toward the oil market. So right now they're just gonna temporarily cover their position because they might be wrong. So for them, it's just better to profit first and re-enter the market after November 30. And that's why you have a news in a wave of buying into it, but the buying was really due to the short covering. So there's no new position being initiated by buying the futures contract in WTI. So that really shows the lack of confidence from traders, the people who actually trade the market, toward the oil market. That's just another more bearish sign toward this meeting. But of course, no one knows, as I keep mentioning, we're not here to predict the future, especially these kind of fundamental events. Nobody really know. I'm just telling you in terms of history and human nature and how the economy works. It's really leaning toward not really know whether this is going to work, and even if it does work, and not really know if it's going to work in the long run. Right? It's just against a lot of nature of the economy and human. Another news is the first meeting, or maybe the initial meeting from Britain officials, talk about Brexit exit with the EU officials. Of course, a lot of German-led officials keep stressing, and again they kept stressing again today, is that Brexit means Brexit. That means that they really don't want to give any special treatment to Britain. However, the whole thing is just up in the air right now, so there's really no fundamental news in terms of British pound, and any movement of the market really contribute to thin liquidity. So right now, not much big money are flowing to British pound because nobody knows where it's gonna go. So really a lot of hedge fund, private equity is just not going to put their money in British pound. So a lot of trading is really contribute to thin liquidity. But in terms of thin liquidity, you're actually going to have a lot of large movement. So it might not be a bad thing when it comes to thin liquidity for traders, especially if you are more short-term perspective. Of course, many of you have watched a YouTube video by Donald Trump saying that he is going to I forgot the official term, but basically he's out of the TPP. So basically he's not going to continue the Trans-Pacific partner deal. Like he's not going to be in that part of the deal. So that again might be a bearish sign or bullish sign for US. We really don't know. But again, what happened in US is still up in the air, but people are leaning more bullish just because the interest rate market, just because the domestic labor market, all these are very good sign. And we're gonna see what happened to the international trade for US by 2017. Then we'll have a better prediction, a better direction to see where the US dollar is really going to go. But as for now, it is still very, very strong, very bullish, and really perhaps the only bullish currency that worthwhile to buy. RBNZ, I just type on a few of their, basically it says global disinflation is what caused their low inflation market. They're still low on the inflation, also because the consumer are not willing to spend. They're more cautious. They are at the temporary debt overhearing, so they need to release some debt before they can borrow more money to stimulate the market. And they're also saying that they are not in the economic stagnation. So they're okay. They're basically saying we're doing okay. Things are not too well, but we're okay. So really not much to get a hint from the comment. Another comment from RBA, recovering in the mining states, recovering help inflation, and lack of full-time employment growth is basically all in the waste mining area. High home price, household debt still a risk, but less so than last year. So again, not much to look at into these things. The only thing you might pick up is that the mining states is recovering. So again, that's another good news for commodity sectors. And as mentioned, commodity sector has been quite good for past sometimes. And then the recent drop is really due to the speculators dumping their futures contract. So it might well pick up again. I understand that commodity market does have a real support from China. So as long as China continue its infrastructure, continue its production, manufacturing, Australian economy will be very well supported. So really, like I said, I'm quite bullish toward Australia. I do think Aussie dollar is still a very good buy. We just want to avoid the current negative sentiment. But whenever you see sign of reversal in Australian dollar and New Zealand dollar, it's really a good chance to get into it, which we'll take a look at to see if we have any of that. Other than that, we have again the COT is same thing, November 18. All the positions right here. The currency indices, really nothing much to talk about today. Everything is in the range bound, just to mention that first. So you do have these kind of bearish candles, small candle, red, green, but everything is really in the range bound. So in terms of candlestick position, nothing much happened. As I say, the market is really in a very sentiment driven, and a lot of currencies are actually in thin liquidity. But let's take a look at our 20-year currency pair. But before that, actually, I want to take a look at what's going to happen tomorrow. Because I remember there was a fiscal policy or something. So tomorrow we're going to have an autumn forecast statement, which is, you can read that description here, economic outlook, government budget for the coming year. So this is quite a significant thing, of course, because what you want to see in this kind of government budget is really to see if they have any stimulation plan. So you wanted to know if government is going to pump in more money to help the infrastructure or public sector, and that's all going to be very bullish sign for the economy. So basically, that's what you're looking at in terms of when you're looking at this kind of budget, just to see if the government are willing, especially now in this kind of low interest rate, low inflation market. Really, the most thing that government can do is the fiscal stimulations. So that's what you want to look at into this kind of forecast statement, just to see if they have any constructive plan in terms of to stimulate the economy. And then that's it. And then of course, looking at the details, only maybe have any surprise factors. But in terms of how is that related to British pound, then of course, if you have a more a stimulus market, then it's gonna be good overall for the economy. It's gonna support the currency in overall. So that's all going to be something that will take into effect. Of course, sometimes you have fiscal easing that is going to actually, in terms of lower the interest rate, decrease, devalue the currency, and of course that's going to be negative for the currency. So it's just a different side of story to see how exactly are they going to run, and of course also depend on how you trade the market. If you are short term or long term, that's all going to take into consideration. Other than that, you have a regular unemployment claim from US and core durable goods. All these are not really tradable, to be honest, but because the US dollar is very strong nowadays, so I might use this data. If we have a positive surprise, I'll use this data to buy more US dollar. If we have a negative surprise, I'll just stay out. Maybe when it dropped to a certain level, then I'll get in. So what I'm saying is that anything in the US fundamental data is just for me to looking at a better opportunity to buy US dollar. What I'm not going to buy against, and then I'm really looking to buy against Japanese yen or euro dollar nowadays, as Japanese yen is still very negative towards its value. But of course, you have to watch out for any sort of events. Like last night, we have the earthquake. That's of course supported Japanese yen a little bit, and euro dollar will be a very good currency to short as well. Tomorrow we also have crude oil inventory, so you can take a look at that. Especially any oil news is very significant right now ahead of the OPEC meeting. Then finally, you do have FOMC minute. This is very important. This is perhaps people will pay more attention to it, because you want to see whether the Federal Reserve have talked more about further easing. And whether the December easing is really confirmed. Right now, pretty much it's confirmed in the market. Everybody is pricing already. We have about 90% of chance in the CME market that the rate is going to be hike in December. And that's pretty much it for tomorrow. I don't really have anything else. But if you want to trade like that, you want to buy US dollar, then really you don't need to jump in these kind of events, because US dollar is already strong enough. And if you have a negative data, I wouldn't suggest you to short. In fact, I would actually suggest you to use that to buy more. So just wait for the data to come out, and then if you have, and look at the price action, and if you have a negative number, wait for it drop to a certain attractive level, then you can buy into it. If you have a positive number, pretty much, I would not really jump in with positive number unless it's surprise. So let me give you a surprise then, a surprise number, maximum and minimum. So the core durable goods expecting to be 0.2%. The maximum number is 1%. 1%. So if you see anything above 1%, that's a positive surprise. A negative number is 0.5%. Sorry, it's a negative 0.5%. Negative 0.5%. But if you see anything negative 0.5%, don't really short it. Just wait to buy back, right? Wait to buy at a better level. That's the core durable goods order. Unemployment claim, we are expecting 235k. 250. I have 250 at Reuters. So 240. We have 241 at Forex Factories. So 241 expectation. If you see anything above 265, that's a positive surprise. If you see anything below 225, that's a negative surprise. So this is more important because the job market has to remain full employment for the Federal Reserve to hike the rate. But if you're within the range, there's really nothing to look into it. So if you have any number that's really below 225k, that might be a warning sign. I still won't short it just because I don't want to go against this positive sentiment of US dollar right now. But if you have anything above 265, then that's a very positive sentiment for you to buy into US dollar. Okay, so let's take a look at 28 currency pairs. So first, we'll look at Euro. So Euro Pound. Again, look at this line I draw. We're really right in this ranging area. Really nothing much happening and going on right now. Euro Swiss have another update. So really basically just another down day for Swiss franc. And Euro dollar, again, you have a great green candle today and another basically, I wouldn't really nothing significant to be honest with you. I know it does look like a bearish kangaroo tail, but it's really in the range area. And in terms of fundamental and sentimental, it's just I'm not going to buy euro against dollar, especially in daily trade. So really nothing worthwhile for me to see. If we might of course have a little bit upside again, like I say, if it goes to 1.0750 in this area or even 1.0870, 50, this is a good area to look into short. But I really think it might just be a range market for now on. Tomorrow, of course, the Federal Reserve, the FOMC minute might give another surge of volatility, but we'll have to see. Euro Aussie, another down day for Euro versus Australian dollar. Again, very positive, number for Australian these few days. Euro CAD, another down day, but we have this nice basically kangaroo tail. But again, not going to short Canadian dollar against this positive sentiment. Really, if you're looking at any euro pair, I'm really only looking to short nowadays in terms of euro dollar. So that's pretty much it. Look at British pound, pound Swiss, range area. Cable is another ranging area. Yesterday, I did not enter this one. I say that. Wait, is that the one I'm looking at? No, it's not this one. Okay, let me keep going. Oh wait, it is that one. Yeah, this one. I did not enter this one, and if I did, it will not be filled anyway. So just to give you a heads up, if you got in. If you try to get in, and then you should cancel your order because if it doesn't get filled, it's just not a good strong momentum. And momentum is if you're buying at low, then if you don't get filled, maybe you can give it 1 or 2 days. But if you're buying at high and you didn't get filled at the second day, I would definitely get out because that means I don't have enough strong momentum, and momentum is necessary for breakout trader. So this is a very different thing. If you are a reversal trader, you have the leisure. If you are a reversal trader like here, you have a leisure to wait a couple days, right? Because the market needs to hit a resistance and then maybe pause 1 or 2 days before it reverses. Same thing, market needs to hit the support. You pause 1, 2, 3, and then you start taking off. But in terms of breakout, you need immediate reaction for it to work. If you don't have an immediate reaction, the odds decrease significantly. So let's just give you a heads up. Like there's a breakout trade. If you didn't get filled, you should just get out because the more you wait, the more possibility you get whipsawed, you get filled, and it goes against you. So really, watch out for different type of trading. Breakout trading, definitely cancel your order if you don't get filled the second day because you need that momentum. Cable, as I say, nothing really significant. Pound Aussie, Actually, Pang has a good candle. Actually, looking at that, you have a bearish kangaroo tail today. Sorry, a bearish big shadow today. Not a really good one, just because not a really good one because there's no space at all. But I actually might enter this one just to let you know. I'll of course do more analysis later on, but just looking at it, you're actually at this great level. This is a very good, support or resistance level, and I know we are not closing below it, but again, it's just a support zone, right? This is not a hard, set in stone line. For me, it's just a signal, an area. But I do like the look of it, and of course, like I said, I'm more bullish toward Australian dollar in general. So I actually like this one. Not a perfect candle, but a pretty good area to get into it. So I'll do more research later on. You can take a look at my website to see if I take this one. But if you are interested in it, this is a pretty good one. Now let's keep going. Pound cat. Okay, a range area. Pound Newsy. Another ranging area. And Pound Yen. Really nothing much to see. Swiss yen, really nothing much to see either. Still in the ranging bonds. Dollar Swiss keep going up. Again, pretty good bullish, engulfing candle today. But just understand, if you're buying right now, you're buying at a very high level. But of course, it might really keep going up, So there's nothing wrong with buying a breakout. Just remember what I say, you do need a breakout to happen second day. Dollar yen continue to go up, very good sign. And like I said, I actually have a dollar yen and dollar Swiss position. But like I said, I trade everything in intraday right now because everything just keep edging higher. So I took opportunity with a short-term trading, but I don't want to commit it a big risk capital into a daily trade. Because you just have more downside than upside at this kind of environment. Aussie Swiss continue to go up actually the third day, so it turned out to be a very good signal. Whoever bought here is a very, very good for you. Like I said, if it's in a good position, you don't really need such a good candlestick to show you. Oh, sorry. So Aussie dollar. Again, so just look at that. Australian dollar is actually very strong nowadays. And Aussie CAD, you have this good candlestick again. Aussie New Zealand also have a good update. Aussie yen, same thing. So generally speaking, a very strong momentum for Australian dollar at the moment. And that's a pretty good sign for Australian dollar. Aussie CAD is actually not bad to buy, but just I don't want to go head to head against Canadian dollar. So really, the only thing looking at maybe Aussie New Zealand, but Aussie New Zealand is not in a good area or not having a good candlestick for me personally. So I'll wait. But other than that, I was saying Pound Aussie will actually be a good one for me to enter. CAD Swiss. Again, Canadian dollar keep edging higher, but look at all this indecisive candle. Yen, same thing. Look at the indecisive candle. So really, I don't think the market shows too much faith toward the OPEC making. New Zealand Swiss franc and New Zealand dollar. Again, another indecisive movement. New Zealand CAD, small green candle, and New Zealand yen. It's again another small doji. So really, that's really nothing much to update in the market nowadays. And again, just keep your eye on still the strong currency still remain to be US dollar, Australian dollar, and weak currency still to be Euro, Swiss franc, and Japanese yen. The rest are quite neutral in terms of British pound, in terms of New Zealand dollar. Let's say for now, we will of course looking to buy US dollar if we are providing a good level, or you can simply trade into the session. Trade in the short term, whatever method you like to use, but basically US dollar is still a very strong currency to buy for now. Other than that, watch out for tomorrow's FOMC minute. Watch out for the fiscal policy forecast statement from Britain, and on core durable goods and employment claim. And that's pretty much nothing really like a big events to trade, but just keep an eye on that, and we'll see what happens to the market. And also keep an eye on the news, because really you're gonna see what Donald Trump is saying right now. It's really predict the direction of the US and the global market in 2017. But of course, don't get too sucked into it, because nobody knows. We don't want to pay too much emotion into it, right? It's just politics, for to be honest with you. I'm pretty sure this year really nothing big is going to happen in terms of politics. But of course, by the way, I refrain from that, because in December we do have a referendum from Italy. That's going to be another political drama for Euro, so we'll keep an eye on that. But other than that, it's really, in terms of North American, it's really nothing really going to jeopardize the political movement for now. Okay, so guys, if you have any questions, feel free to leave comment below or let me know. Otherwise, I'll be back tomorrow to give you another daily analysis. Thank you very much. Bye bye.